Now let's jump into the downtrend supply zone. Remember, I said you can trade supply and demand counter trend, but what I do is I'll trade with the trend. And that's the most highest probability setups for me. So the downtrend supply is based on a longer term downtrend, and the medium term trend will give us a supply. And once that forms, we'll be waiting for price to return there and be looking for, if it's the indices, NAS 100, SPX, US 30, 15-minute candle, 5-minute break of structure. If it's GU, GJ, or one of the pairs, then you can look at a 30-minute to 1 hour candle in that zone, and that should be sufficient. So let's jump right into it. All right, so now we're gonna look at GU first. Same process. The more you do this, the easier it'll become and the better you'll be at it. So market structure, zones, entry signal. Market structure, zones, entry signal. We're going to be looking for the 4-hour supply here. But if we look at the daily, look at what was happening. So overall, the British pound is in an overall bearish trend. But if we look at the daily for, the most recent news, right, when it comes to what's happening, the most recent pattern, when it comes to what's happening with GU. So if we look here, okay, if we look here, price started to trend. It was creating lower highs, broke structure, went here, price held for a buy, but then price melted. Aggressive selling happened here, okay? And as we discussed before, we don't know we don't know if price is going to come all the way back up to the zone or if it's just going to continue to break levels. So oftentimes depending on what's happening in the economy, price can just continue to break levels, okay, and sell aggressively. So we have another level here that's created. This is a resistance here. See, price is rejecting from here. That's a resistance. That's a resistance there. And then this swing was created to come here. See this? And that was another level that was broken. Okay. So that level is broken. This level is broken. That level is broken. And this level is broken. Whoever sold from here, man, they're making a lot of money. So now we see that these are levels that are broken. Okay. Lower low, lower high here. So what we're going to try to do is we are going to try to look for a lower high, where the lower high can come. Okay. So the lower high can either come here to this zone that broke and sell, or can come up here, but we don't know. So as I mentioned before, we have to be willing to pay the fee. So we're going to go to the 4-hour, and what we notice on the 4-hour here is that we actually have two supply zones, right? So we have a drop, base, drop here, supply zone. Okay, drop, base, drop. And then also we have a rally, base, drop up here. So these are two zones that will be ideal to sell from. Okay, so we have to be willing to take willing to pay the fee to get into the market. So as I always mention, if you lose here, there's a high possibility that it can come here and continue to sell, because the higher time frame, the daily, is bearish. Okay, so until price breaks this daily high, we are selling. If price breaks above this daily high, let's say we take a loss, no problem. Our bias has changed now to a buy. So the way that I trade, the way that I'm sharing with you in Profit X that we trade, is that we trade around major zones. Okay, if we rank the zones from 1 to 5, we trade around the 4 to 5 level zones that are massive. So if you think about this here, this is 4 days and price could not break this resistance, right? 4 days and price could not break this support. Once price broke that support, whoever was buying right here now is most likely changing their bias to sell. So that's what's happening psychologically. Whoever was buying against these aggressive sellers here, the passive buy orders that caught here, the passive demand that stopped this momentum. Whoever was there, once it broke, a lot of them are turning their bias to sell here. Okay. So if we take a loss here, no problem. This is a good setup. We should take that loss and take it and be happy about it. You should be happy to take that because this is a great setup. So now if we go to the 4-hour and we look at the 4-hour. So the 4-hour here, I'm going to rewind this a little bit. So we're looking at the 4-hour, and what we need to do, as I always mention, is that we already have our confirmations, downtrend, 4-hour supply zone, daily zone. Now we're going to go to the 30-minute and be watching the 30-minute time frame. Okay. So this is around London for GU. So London open happened here, big bullish move up into our zone. So we're all the way up there in our zone now, right? Tweezer tops, okay? 30-minute tweezers here, 30-minute tweezers here, okay? Another 30-minute tweezers there. That's it. 1 hour bearish pin bar, 1 hour bearish pin bar, strong. That's all we need to see. We should short right now. Here, stop loss above there, above that candle, TP there, and 1 to 3 setup. That's it. That's our setup. Okay. All right. So price is going to melt. All right. That's how we do it. Now let's take a look at US 30. So US 30 has a similar situation on the daily. Okay. So daily broke a strong, it broke a strong level. It was creating higher high, higher low, higher high. Then it went into a big decline. Okay. Went into some distribution here. Did a fake out to the upside, big decline. So they got demand in here. So buyers were coming in, and then some aggressive supply came in. So look, buy went all the way up here. The aggressive buyers took the price all the way up here. And then aggressive selling happened. So whoever was in these buys, they've either taken their profits or taken profits and went into a sell. So once price breaks this zone here, we're going to go to the 4-hour. Okay, look at our zone here. And what we see on the 4-hour is that we have a rally base drop. Okay, this is our 4-hour supply zone right here. Rally base drop, massive candles. Look at the volume. Okay, we talked about qualifying supply. This is a supply zone right here, massive, high probability move. Okay, so now when we see this bearish pin bar, if we did a limit order, 50% of that, that's a 1 to 3, and held it, that's a 1 to 5 here. Okay, remember, if you have a 4-hour candle in the supply, you can shoot 50% here. If you entered here, it'd be a 2.5. So we want to try to get it higher. Now, how do we get it higher? We want to be looking at the lower time frames. If with the indices, 5-minute, 15-minute candles. Okay, 5-minute, 15-minute candle, 5-minute break of structure. So this is the 6-minute. I'm looking at the 6-minute right here because of I can't get into the 5-minute because of data. So once price came into this zone, what we're going to see here is we have a break of structure here on the 15-minute. Boom. Broke structure right there. So price is going up. Boom. Broke structure. When we have that break of structure in the 15-minute, on the 5-minute, this right here is good enough confirmation for us to enter. So we should have a 5-minute break of structure and a 15-minute candle. Yes. Here. Whew. Beautiful. Beautiful, beautiful, beautiful. 15-minute break of structure as well. So look at the candles in the deep in the demand zone. Bearish engulfing, bearish pin bar, bearish engulfing. Once that is printed, that's way more than enough for us to enter into this position. This is a great entry. If we even held it to here as 1 and 3, but if we held it to the 4 hour, we held to that 4 hour low, then we have a great position for us. Whew. Okay. 1 to 4. Okay. Beautiful. Okay. Now, oh, this is the 1 to 8 here. Yeah, this one. No, sorry. Okay, wait. We should be over here. So that's not the 1 to 8. This one is it. This is the one. That one we already talked about, but this one is here. 15-minute. Same thing though. In the demand zone, in the supply zone, we have a 15-minute candle, 15-minute bearish pin bar, 15-minute bearish engulfing. Remember, as the demand rises higher, there's some supply that is blocking. Okay, there's supply that's blocking. And then for price to go back down, what has to happen? There has to be aggressive selling. So this is aggressive selling coming in at the supply zone. Indecision, then more aggressive selling. So it is likely that the aggressive sellers, the institutions, had their limit orders here. Okay. It consumed some of the demand, and then they're going to aggressively sell. Aggressive sell, aggressive sell. Came back up for the retest, but we already seen enough. 15-minute candle, 15-minute candle. There's going to be a 5-minute break of structure here. So I'm on the 6-minute only because of the issues with the data. But if you take a look here, okay, price broke back down here, created a lower high. Okay, so once price does this, we are good. We are good to be selling. If we want to put our stop loss there above the higher candle up there, that's fine. Even if we, as it retraces, we got an entry here, 50% of this bearish engulfing. That's great. And then we'll be holding here for a 1 to 7. Beautiful. Now just imagine, you all may say, okay, there may not be a lot of these setups. I may not be trading a whole lot every day. Let me ask you a question. Would you want to make $20,000 and trade 1 time per month? Or do you want to trade 20 times per month and make $20,000? The purpose of my question is because you want to make money. If we trade these high probability setups, you have less stress. So these are very high probability setups. It just takes a little bit longer for you to wait for them. But this is just the way that I trade. Now, just imagine 100K account, you risk 1K to make 6K in one trade. Let's level that up. 400K account, risking 1%. You risk 4,000 to make 24,000. I think most of us would be fine with this, right? In one trade. So just start thinking about that. Okay. Then when you scale up to $1 million, you're risking 10K to make 60K in one trade. Whole nother level. Okay. All right. So NAS 100. Let's take a look at NAS 100. So NAS 100 had a similar scenario here where we are downtrending. We're breaking levels. Okay. So we're breaking levels. So this is a level here on the daily level. Okay. This is a daily level. Price is breaking another one here. So price broke this level it left us a daily supply, drop, base, drop up here. So remember, as I said, we have two supply zones that we're looking at. We're going to go down to the 4 hour. Okay. And as I keep mentioning, we have to be ready to pay the fee. If we get price action here in the supply, we have to be ready to pay that fee. If we get price action here in that supply, we have to be ready to pay that fee. Okay. So we can pay 1% here if we take a loss. If we had our confirmations, we had to take it. Why? Because like with US 30, we don't know if how high price is going to go. Price can come here and then melt and it'll leave us. So if we get our confirmations, we have to take the trade. Okay. We can't be scared to lose. So if we look at with indices, as I always mention, 15-minute candle, 5-minute break of structure. So here, 15-minute candle, evening star, massive evening star. Okay. All right. Massive evening star. Remember, let's talk about the psychology of the evening star. Demand was here. Demand was strong here. Demand was strong here, but failed. There's some supply that's blocking it. And then aggressive sellers come and they clear out all that demand. So the aggressive sellers came inside of our supply zone where the institutions trade from. So once we see that, that's a sign that price is going down. So that's all we need to see. We need to see that bearish evening star. Once that forms, we enter. Put our stop loss there. We can enter one position here and another position around 50% or so here for a greater R&R. So we enter one at close, price goes down, comes back up for the retest. We definitely have to enter here. If we didn't enter here at the opening bell, when price comes back here, we have to enter. Why? Because we had a 15-minute break of structure. Remember, 15-minute break of structures on indices in the zone is A+ setup. We have to take that one. A+ setup. Okay. So the break of structure, we had a new low created to come back up here to create a lower high to continue down. So this is a great setup. 1 to 3. Okay. So sometimes you may say, well, what about this? What if I want to hold it? You don't know. So hold it till you get to the 4 hour zone. Okay. And you can leave some running, but you don't know what's going to happen here. It could reject and go up. So don't worry yourself with, oh, I should have held it. Just get your solid 1 to 3. Get that with the most, take profits on that and move on. Okay. All right. Last one is GJ. Let's go on to GJ. So GJ here on the daily. Remember, we're starting from the daily. So the daily time frame with GJ was breaking levels as well. Okay. So lower low, lower high here. Lower low, lower low, lower high. Okay. Now we're looking for a lower high here, right? For price to continue down. Okay. So now we're anticipating a drop. Okay. So we are anticipating that GJ will create a new daily lower low. Okay. So we're going to drop down to the 4 hour. And if we look at the 4 hour, look at what happened here. So we have a rally base drop, massive candle, huge volume. So if price comes back up here, we're looking for a sell. Okay. So what we're going to do is we are going to look and see I'm going to go to the lower time frame as price approaches here. Go to the lower time frame, okay? And we are going to sell when we have 1 hour, 30-minute candle, okay? So right now we are looking at the 30-minute, 1 hour. I'm going to scroll down to the 1 hour. Okay, we're going to start to see. So we have some indecision here. What we see forming is, so we have bearish candles here. So not a lot of demand anymore. The demand was halted. It's in the supply zone. Price comes here, gives us a bearish engulfing candle here. So there was demand there, buys that were pushing up, and then they failed. Supply, aggressive supply came in to push down. So here, if we wanted to enter to this zone, that's even fine, right? Now we can enter here, have our stop loss above, and then we can continue to wait on our position to play out. So if we look at the 15-minute as well, bearish engulfing candle, evening star. Okay, this is our supply zone. So we're safe here at the current time to enter. Okay, so once we enter, we had that 30-minute bearish candle here. Then there was the indecision. We should have entered. Could have entered at the close or 50%. So I'm going to talk about in a later video of how you can put two positions. One position is at the close and another position is a limit order at the 50% of the candle that you're going to enter on. Okay. So once that happens, we could hold it to here. This even to this minor zone gives you a 1 to 4. But if you held it here, it's 1 to 5. If you held it to the previous, that daily low, it's a 1 to 9 setup. Okay, most people won't have the stomach for that. But we could have got a nice 1 to 5 from there. So price just goes, it hits this zone, comes back up here. I would be looking at what's happening on the higher time frame to see what's unfolding. So, okay, so still under, still rejecting. Okay, so here we could have got another entry. We look at the 30-minute time frame here, tweezers, bearish engulfing. Okay, so we can get another entry here, and then we can just take profit this zone. Okay, 1 to 4. This is enough for us to make good money. Okay, the zone, and we entered, and then so price gave a number of entries before it melted. So I'm gonna let you go take a look at this, but that's our supply. So we went through GU, US 30, NAS 100, and GJ. These supply and demand zones are my favorite. It helped take my trading to a whole nother level, and it will do the same for you when you trade them with the higher time frame trend. Leave your comments and questions in the comment section. Do your homework. Find those supply zones. Look at the PDF that's attached. See you in the next video.